Many individuals associate stock market investing with large corporations such as Amazon or Apple, which are worth millions of dollars. Nevertheless, starting your investment journey doesn't require thousands of dollars to start. Numerous stocks with prices below $100 have a substantial potential to rise and appreciate in value. Purchasing a share of stock implies acquiring a fractional ownership stake in a company that's publicly traded. Companies offer shares of their stock to generate funding for upcoming initiatives, pay off liabilities, or venture into a new market. Meanwhile, various other entities, such as hedge funds, traders on Wall Street, and investment management firms also invest in these companies. Typically, companies initiate the sale of their stocks to the public through an initial public offering, or IPO. Following an IPO, investors can trade a company's stock on a daily basis when the stock market is open. Numerous investors retain their stock holdings for extended periods, constructing a retirement account or just for their investment portfolio. There are two ways that you can earn a return on your investment when you buy a stock. The main method in which investors generate a return on their investments is by retaining their stock until it appreciates in value. While it's feasible for your investment to decrease in worth, historically, the stock market has exhibited a tendency to increase in value by an average of 7 to 8% annually, accounting for inflation. Holding on to stocks enables you to obtain current or future income, depending on the timing of your sale. Dividends refer to a proportion of the company's profits that it distributes to investors as compensation for holding their stock. Although not all companies opt to provide dividends, many do so to incentivize investors to purchase and retain their stock holdings. These stocks may not be undervalued, but they do yield a return. As a result, you can devise future plans and generate a consistent income stream. Investing in stocks below $100 can be a cost-effective strategy, but it's crucial to factor in the growth potential of each new asset. While some stocks may never exceed the $100 threshold, others may effortlessly surpass it and reach even greater heights. However, it's difficult to determine which assets will ascend to such levels and which will remain stagnant. This underscores the importance of continuously monitoring your portfolio. Stocks can be bought or sold via a stockbroker. A broker is a firm or an online exchange that enables retail investors to purchase and sell stock holdings, often in exchange for a fee or a commission. The chosen broker can significantly influence the trading platform and the overall returns of your investments. Therefore, careful consideration of your broker selection is crucial. Some of the features you might want to consider when you open an account with a broker include: when you open an account with a broker, you'll be granted access to a trading platform that enables you to submit buy and sell orders. If you're a first-time investor, it may be wise to select a broker that caters to individuals opening a first-time brokerage account. Although several brokers presently provide commission-free trading, it's unwise to assume that all services provided by the broker are free of charge. A broker may charge a fee for each trade or an annual account maintenance fee. It's imperative to review the pricing schedule for each broker and ascertain the applicable fees before opening an account. Most brokers offer extensive access to the US stock market, but some brokers also provide access to cryptocurrency trading, forex, and international markets. If access to these markets is essential for you, ensure that you select a broker that offers broader market access. Certain brokers require a minimum investment when establishing a brokerage account. If your chosen broker has such a requirement, ensure that you can meet it before applying for an account. If you only have a small amount of money to invest, you might consider seeking a broker that allows $0 account minimums. Although there isn't a guaranteed approach to distinguish between profitable and unprofitable investments, there are several crucial characteristics to seek when investing in the stock market. It's essential to identify these features before purchasing stocks. Quarterly earnings and profits must be disclosed by publicly traded firms. It's crucial to examine a company's earnings over time before investing in a stock. If a company's earnings appear to be rising every quarter, even by a small amount, it's a positive indication that the company is on the right track. It's common for companies of all sizes to have some level of debt. However, when evaluating a company, it's crucial to ensure that the debt of the stock you're investing in is proportional to its income. You can determine a company's debt to income ratio by dividing its total liabilities by the total amount of shareholders' equity. Determining what constitutes a good debt to income ratio can vary depending on the industry in which a company operates. For instance, the construction industry generally has a higher debt to income ratio due to the reliance on debt funding. It's advisable to compare the debt to income ratios of the company you intend to invest in with its competitors to gain a better understanding of the company's financial status. Dividends are not mandatory for most companies, which is why if a company does choose to pay them, it can be a sign of strong financial stability. This is especially true if the company has consistent dividend payments year after year. Exercise caution when considering companies with a high dividend yield. This yield is calculated by dividing the annual dividend payout by the current stock price. Companies that consistently raise their dividend payouts may be struggling to attract new investors, or they may not be investing enough money into future growth and maintenance, which could lead to financial troubles down the road. It's generally wise to avoid investing with companies that have a dividend yield exceeding 14%. Such a high dividend yield is often not sustainable for the long term and may indicate that the company may soon need to reduce its dividends as the stock price decreases. The stock market is known for its volatility, and it's not uncommon for companies to experience periods of decline. However, it's important to consider a company's long-term plans and projections before making an investment decision. Before investing in a company, take a close look at its history, including long-term trends in its stock price and earnings. Investing is not limited to those with a lot of money. Many excellent companies with significant growth potential trade at prices below $100 per share, and even large investors and firms allocate a portion of their capital to smaller companies. However, if you prefer to invest in a larger company, such as a mega cap option, you may want to select a broker that enables you to purchase fractional shares of the stock. These brokers allow you to invest a specific amount of dollars instead of purchasing full shares, which means you can buy a portion of a share of a popular stock such as Amazon, Apple, or Facebook, even if you only have $10 to invest. To my knowledge, most of the brokers out there, such as Robinhood, Interactive Brokers, Thinkorswim, and more, allow you to do this. In this portion of the video, I'll be naming a few stocks that are under $100 that seem to have a growth potential over the next few years. Morgan Stanley is a multinational finance company and investment bank. They rebounded exceptionally well since the onset of the COVID-19 pandemic, and the stock price fully recovered. They maintained a positive earning trend over the last 4 years and even through the pandemic. The Booz Allen Hamilton Holdings Company is a management and consulting service providing services to defensive departments of the U.S. The company has a long history of steady stock price increases as well as solid EPS values. Booz Allen's revenue versus earnings results show that the company has a consistent increase in profits yearly ever since 2017. It also provides a stable yet attractive dividend yield of 1.44%. As an original e-commerce website, eBay maintains a top position as more and more shoppers order online. eBay stock has seen consistent and steady growth ever since the stock market crash. eBay's consumer-to-consumer model seemed to have filled a hole in the online marketplace for collectors and casual shoppers alike. eBay also recently gained a major boost of cash from the sale of a StubHub, an online platform that helps shoppers find tickets to concerts and events. Activision Blizzard and its subsidiaries develop and publish interactive entertainment content and services in the Americas, Europe, and Middle East, as well as Africa and the Asia Pacific, operating through 3 segments: Activision, Blizzard, and King. Triton International engages in the acquisition, leasing, and sale of various types of intermodal containers to shipping lines, and freight forwarding companies and manufacturers, operating in 2 segments: equipment leasing and equipment trading. That's it for the video, and if you're new to investing, I hope that you learned something and took something away from the video. Make sure to check out some of the other videos I posted, and I'll leave it somewhere over here. I wish you the best of luck, and I'll catch you guys later.